As a program management expert, one of the most common challenges I see small business owners, freelancers, and even seasoned entrepreneurs face is managing the financial intricacies of multiple ventures. Whether you're running a design agency and a separate e-commerce store, or juggling consulting gigs with a side hustle, keeping your finances organized is paramount to success and sanity. This is where accounting software like FreshBooks comes into play, and a frequently asked question is, can I have multiple companies in FreshBooks? The good news is, yes, you absolutely can have multiple companies within a single FreshBooks account. This feature is a game changer for anyone managing more than one business entity, offering a streamlined approach to what could otherwise be a chaotic administrative burden. Let's delve into what this means from a program management perspective and how it can benefit your multi-company operations. The power of centralized financial management. From a program management standpoint, managing multiple companies within one FreshBooks account is akin to having a single, comprehensive dashboard for all your programs, i.e., your businesses. Instead of logging in and out of separate accounts or juggling different spreadsheets for each company, FreshBooks allows you to keep everything neatly organized under one roof. Think of each company you set up in FreshBooks as a distinct project within your overall portfolio of business activities. Each project needs its own budget, its own invoicing, its own expense tracking, and its own performance metrics. FreshBooks' multi-company feature provides precisely this granular control while maintaining a unified access point. How FreshBooks manages multiple companies. When you add another business to your FreshBooks account, it effectively creates a completely separate financial environment for that entity. This separation is crucial for accurate bookkeeping, tax preparation, and understanding the individual financial health of each of your ventures. Here's what happens and what remains distinct for each company. Independent financial data. This is the cornerstone of the multi-company feature. All financial information, invoices, expenses, payments, reports, and client data for Company A remains entirely separate from Company B. This means you won't accidentally send an invoice from your design agency to a client of your e-commerce store, nor will expenses from one business get mixed up with another. This separation is vital for maintaining clear financial records and avoiding errors. Unique chart of accounts. Each company can and should have its own chart of accounts. While there might be some common categories, e.g., office supplies, rent, the specific revenue streams and expense categories relevant to a particular business will be unique. FreshBooks allows you to customize the chart of accounts for each entity, ensuring accurate categorization of transactions pertinent to that business's operations. Separate invoicing and client management. You will create invoices, track payments, and manage clients independently for each company. This means your client list for Company A is distinct from Company B. When you log into Company A, you only see its clients and invoices, reducing clutter and preventing mistakes. Distinct expense tracking. Expenses incurred by one company are tracked separately from another. If you have a shared office space, for example, you would record the portion of rent applicable to each business within its respective FreshBooks account. This segregation is critical for calculating individual profitability and for tax purposes. Independent reporting, generating financial reports, profit and loss statements, balance sheets, expense reports, etc., is done independently for each company. This allows you to assess the performance of each venture in isolation, providing clear insights into which businesses are thriving and which might need more attention or strategic adjustments. This is invaluable for making informed program-level decisions. Separate subscriptions. Generally, while your login might be unified, each business you manage within FreshBooks typically requires its own paid subscription plan. This is because each business effectively consumes the full set of FreshBooks features, client limits, users, etc. independently. This is an important cost consideration for program managers overseeing multiple entities. Shared login. The primary convenience lies in the shared login. You use one set of credentials, email and password, to access your FreshBooks account. Once logged in, you can easily switch between your different company profiles with just a few clicks. This saves significant time and reduces the hassle of remembering multiple logins. Benefits from a program management perspective. For program managers, freelancers, and small business owners wearing multiple hats, The ability to manage multiple companies in FreshBooks offers significant benefits. Streamlined operations. No more juggling multiple software subscriptions or manual spreadsheets. A centralized platform means less administrative overhead and more time to focus on strategic growth for each business. Enhanced organization. Maintaining separate, distinct financial records for each entity ensures clarity and reduces the risk of errors, which can be costly during tax season or audits. Clear financial visibility. You gain an immediate, accurate snapshot of the financial health of each individual business. This allows for better decision-making regarding resource allocation, investment, and strategic direction for each program. Simplified tax preparation. With all financial data neatly categorized and separate for each company, preparing tax returns becomes significantly less complex. You can generate specific reports for each entity as needed. Improved efficiency. Automation features within FreshBooks, like recurring invoices, expense categorization, and payment reminders, can be set up independently for each company, maximizing efficiency across all your ventures. Scalability. As your business portfolio grows, FreshBooks can scale with you. Adding new companies is straightforward, allowing you to easily integrate new ventures into your existing financial management system. Considerations and best practices. While the multi-company feature is incredibly beneficial, a program management expert would also highlight a few considerations. Cost. Remember that each active business usually requires its own paid FreshBooks plan. Factor this into your budgeting for multi-company management. User permissions. If you have team members working across different companies, ensure you understand how FreshBooks handles user roles and permissions for each separate entity. Some roles might need to be set up per company. Consolidated reporting, limited while FreshBooks excels at individual company reporting, true consolidated financial reporting across all your entities, e.g., a single P&L for your entire business portfolio, might require manual aggregation outside of FreshBooks, or using a more robust ERP-level system if your operations become extremely complex. For most small businesses and freelancers, the individual company reports are sufficient. Initial setup. Take the time to set up each new company accurately within FreshBooks, including customizing its chart of accounts and initial settings. A solid foundation prevents future headaches.